Earlier this weekend, Cathie Wood's ARK investment posted their Tesla valuation model, saying, wow, this has been a rocket, but could it keep going higher? They certainly think so. They think there's exponential upside potential from here, where they're saying Tesla's valuation can range from a couple trillion dollars to several trillion dollars, $3 to $4 trillion within the next 5 years. That's incredible. This video walks through some of the details of their model and reflects the valuation sort of building up to it, so you can decide how reasonable it is. Personally, I think this model suffers from physics envy. It's where you have someone that's not in physics and tries to apply, like realistic heavy-duty science, or in this case, maybe statistics, and says like, oh yes, this is how we can calculate this very, complex calculation. I think it's way more complex than it needs to, and it's the best investments generally, I think, like if you really wanted to break it down Barney style, you can pull out a crayon and you could be able to explain it to like a kindergarten kid. And the way they did it, it's like they're trying to be some sort of shaman of explaining Tesla's valuation. It's kooky dukes in my opinion. I respect the assets that Cathie Wood has been able to gather. Certainly on Wall Street, there aren't enough women analysts and managers, so I think that's fantastic. I respect what Elon Musk has built across his enterprises. Look, landing rockets in the middle of the ocean is an awesome feat. It feels like you're rooting for humanity when you bet on Elon Musk. That said, let's bring this back down to reality. This valuation model that I'm going to walk through in just a minute, this is an exercise in ridiculousness, pie in the sky sort of stuff. And so like, look, let's just call it out, but I'm going to share the assumptions with you so that you can decide whether or not the assumptions are ridiculous. And if you disagree, obviously post in the comments below, because look, I want to engage in conversation. I get the, oh, Daniel, you're a dope type of thing. And it's like, that's fine, people. Look, this is all about living your own journey. You got to make your own calls, but I want to have a logical framework from what I look at with every investment. This video goes out to Forrest, Lewis, and all my Unrivaled Investing Journey subscribers. About that, let's do a quick 10-second plug, if you will. My name is Daniel. You're watching Unrivaled Investing. This is a no-hype, mission-focused channel to try to find you exceptional companies and unrivaled investments. If you enjoy looking for potential multi-baggers, types of companies that can go up hundreds or thousands of % over time, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Just smash it right now. And if you want to follow my personal journey, what are the potential multi-baggers that I'm finding? Go to unrivaledinvesting.com, click on Journey. So, Tesla's valuation. Cathie Wood's new Tesla price target is out, and it's a doozy per Barron's. Bloomberg saying it's going to be worth, per the model, could be worth $3 trillion based on Cathie Wood's price target. And look, it's already worth, the company itself is currently, $600, $700 billion, depending on the share price in the day. Easy, back of the envelope is there's about for every $1,000 share price, that's the equivalent of a billion, or for every dollar share price, that's equivalent of $1 billion, because there's about 1 billion shares outstanding. So a $700 share price is about 700 billion shares. That's a $700 billion valuation. So that just quick back of the envelope. So let's actually understand Tesla's valuation. This is the updated summary that they have, where they have the expected value of $3,000, which based on 1 billion shares outstanding, you're looking at $3 trillion valuation. When you look at the bear case of $1,500, they're saying $1.5 trillion valuation, and then a bull case of effectively $4 trillion valuation. And here, how did they arrive at this? Let's make this way more complex than you need to, where they say to arrive at this forecast, ARK used a Monte Carlo model with 34 inputs, the high and low forecasts incorporating 40,000 possible simulations. They make this sound like it's something like Neo's fighting the machine over here from Matrix. Our bull and bear price targets are the top and bottom quartile outcomes from the simulations as shown below. So like 1.5 trillion is their bear case, where that's 25% probability of $1.5 trillion and below. The other is this $4 trillion valuation and above, and in between that's the 50%, where it's somewhere between 1.5 trillion and 4 trillion. And so that's the expected value of $3 trillion. So just throw around $1 trillion here. Soon enough, Elon Musk is going to be sending out stimmies to people. So let's look at these simulations, these tens of thousands of simulations that ARK has done. And here's one of the first things. There's a couple of things that are just ridiculous here. So first of all, like doing these simulations to justify your valuation, like this is way more complex than you need to. Like, look, Ben Graham, he broke it down very simply in The Intelligent Investor. Like, look, folks, if you see a fat guy walking down the street, you don't need to know his exact weight to calculate that he's fat. You know it. You just look at it and you're like, yeah, that's fat. With stocks, you look at a company and you're like, yeah, that's cheap. That's not cheap. Yeah, this has this. You don't need to run like, oh yes, let's do 40,000 simulations of jelly jugs running down the street trying to figure out how much he could weigh. I mean, that's no way to think about valuation. That's no way to think about like what this could potentially be. The second part about this that's sort of ridiculous here is that the low side here, and if you look really detailed, this is from their Excel sheet. The low side scenarios of like the left side of the probabilistic distribution of these simulations gets to negative share prices. That's obviously impossible. So like a little bit of amateur hour going on here. Like I personally would feel a little ashamed to do this like on a national level. Like especially when you're gonna get called out to model in something like this where you could be posting negative share price figures. Like that's obviously impossible. So just something to think about when you're looking at these projections of like, yes, on the low side scenario, they're saying yes, there's scenarios where it's negative $360 a share. Sounds good. So let's keep building out this valuation. But that said, actually before before diving in, like their upside, if you keep going over here, they're saying in their tail upside that this is $11,000 per share stock. This is $11 trillion company. This is like, 1/3 US GDP. This alone, it makes me think like you guys either weren't really thinking about your analysis or you're making it way more complex to sort of make people go like, okay, they're being super serious about this, applying some sort of crazy complex physics that this must be, you should listen to Cathie Wood based on this super fancy statistical Monte Carlo analysis. Like, break it down Barney style. No, this doesn't make any sense. Like this range of possibilities is ridiculous. To even show that this could be a 20 trillion possibility. Yeah. It's infinite. It's a very small possibility. Like, dude, let's break this down with a crayon and say, here's your upside of maybe $2-3 trillion most, and your downside. This is literally from their sheet. You press F9 and it's going to repopulate these values because you got all these simulations running. But like to show this as one of the possibilities just strikes me as ridiculous. And say, oh yeah, most of the outcomes, are going to get you into this range that supports the idea of a couple $1 trillion valuation. Okay, whatever. So let's actually understand. Let's go crazy. Let's say yeah, $4 trillion. Let's understand what's going on. So 2020, this is where we're at today. 2025, that's what they're looking at in the future. So they're saying like, look, let's start off with their EV, their electric vehicle segment. Cars sold, 500,000 going to 10 million. Sounds awesome. 82% CAGR in terms of number of units sold in the years ahead. They're expecting the average price to decline significantly. That would be great. Declining from like $50,000 to $36,000. The revenue going from like $25 billion to $366 billion. You can sort of see the breakout. Like, look, these seem like very reasonable way to sort of break it down, saying, what do you think their margins could be? How much are they going to be investing in SG&A? How much are they going to be investing in R&D? And how much in effectively profits at the end. Effectively saying, look, they think the profit margin could double from here in their upside case, going from 6% to 10%. So nearly $37 billion in EBIT, or earnings before interest and taxes. So that's a core measure of looking at profitability. Remember that figure, $37 billion. This is their upside case, the $4 trillion case, in terms of thinking about their valuation for 2025, what they think they could potentially deliver on to get to Tesla being several $1 trillion. So $37 billion in EBIT, or earnings before interest and taxes, for their EV segment. So then Well, it's like, well, wait. You're saying we're going from 500,000 of cars sold to 10 million of cars sold by 2025. 82% CAGR over the next 5 years in terms of growth rate. What's Musk have to say about that? Because like these are fine and well projections, and everyone's like, yes, I trust Cathie Wood, her team of analysts, very serious, and they super experts. Like, wait a second, Elon Musk is telling you they're going to grow slower than that. Here it is in their presentation, their most recent presentation from fourth quarter. They're saying fourth quarter 2020, we are planning to grow our manufacturing capacity as quickly as possible. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. So 50%. Now they say, look, we might grow faster in some years in case they expect that to be the case in 2021. But sort of the rate of growth will depend on the equipment capacity, operational efficiency, capacity, and stability of the supply chain. Like, look, being able to grow at 50% a year, you got to be grounded in physics of like, what can you actually do? What can the supply chain do? And so for them to even model out a scenario suggesting 82% growth when Elon Musk, I'm not saying Elon Musk can't achieve crazy stuff. He clearly can. But his track record generally, in terms of saying when something's going to happen versus it happening, there's generally a little bit of a lag there. So him saying 50% annual growth, I think that is like the ceiling. That is the upside target of what they could do in terms of units sold. And keep in mind, the price per unit sold is going to be declining over time. So your revenue growth is probably going to be lower than that. So for them to be saying 80% plus CAGR in manufacturing, that is kooky dukes, unless they have some sort of special insight that is more, they know more about Tesla than Elon Musk does. Do they? Or is this just a ridiculous model? Something to think about. So then the next is the bear case, is actually still their bear case. Their downside case is still more optimistic than Elon Musk, where they're saying, look, cars sold goes from 500,000 to 5 million in 2025. This is the bear case. Electric vehicle revenue goes from 26 billion to 234 billion. So this is ARK is forecasting 58% cars sold, 55% revenue CAGR for revenue. Both of those are greater than what Elon Musk is saying. This alone, at this point, I would discard their model. I would say, I can't take you seriously for putting this out there. Look, you've had great success. That's awesome. And that's why, in a lot of bull markets, you have a lot of people that you think like, wow, this person's a genius. Let's see a full market cycle. Well, I'm looking at this and I'm saying putting this out here reflects serious intellectual dishonesty, in my opinion, of what will likely happen. Now, especially for a bear case scenario, to have a bear case, which is supposed to be the downside, be in excess of what Elon Musk is penciling out, that's just not reasonable to me. Like, yeah, I can't have a conversation with someone if they're like, yes, I'm starting from pie in the sky land, and here it is, I'm living in reality. So that's just how I'm looking at that in terms of you saying a bear case is going to grow faster than what Elon Musk is saying. So like, let's be reasonable, folks. Maybe the bear case should be like 20 to 30% growth versus 50%. I think that's a more rational, like if you were to start there with your bear case, then I'd say, oh, okay, this person's being rational or reasonable. But for you to start above Elon Musk, who's already putting really tough hurdles on himself and the supply chain to deliver, that's okay. We're just not going to meet. There's going to be no meeting in the middle. So then what are some of the other core inputs to understand the $4 trillion valuation? One is Tesla insurance, where they're saying the percentage of cars sold with insurance, their non-ride-hail cars goes from 1% to 40%. So 40% of the cars sold are electing to have Tesla insurance, so their proprietary insurance. You can see that they have this sort of premiums per mile driven model where it costs like 13 cents per mile. And all of this trickles down, and Tesla captures a huge percentage of the commission from doing this. And you could see, and it's very, their profit margins as an insurance company are well in excess of what you could have with most other insurance companies. And so you get to EBIT profitability of $2.5 billion. So really, really small relative to what you'd expect from electric vehicles, which they're saying is $37 billion. So $37 billion a couple $billion. So now you're talking about around $40 billion in profitability. There's still this huge difference of like 40 trillion, $4 trillion in value versus, a couple billion, $40 billion in earnings. There's still too much of a gap here. And let's keep digging in. So then this last component, this is I'd argue the biggest swing sort of component in terms of their valuation, is their ride-hailing segment. And they break this out into a couple of different ideas, where at the end of the day, first of all, there's some weird things that they did with the model. Honestly, this is another one of those things of like, you guys are making this more complicated than it needs to be because it's not even working for you. Or here it is in the model, human ride-hail cars added annually is a negative figure. Doesn't make any sense. And at the end of the day, this model is based on, keep in mind, this is just a screenshot from the Excel that I downloaded from their link. So I'm literally copying and pasting. I'm not changing any of the values. And so here it is. They're saying the total ride-hail miles is going to be not billions, trillions, 1.4 trillion ride-hail models, ride-hail miles across the Tesla sort of ecosystem. Total robo-taxi miles that's pretty much all autonomous driving. That's what it looks like from autonomous. Total robo-taxi miles, 1.4. And they're saying the autonomous platform cut, excluding China, is 50%. So they get 50% of the revenue from that. And they're saying they're getting a 50% profit margin from that. And that is going to be a $160 billion contributor to their earnings power in the future. And so this is sort of just amazing what they're saying. $1.4 trillion ride-hail miles per year using this fleet of robo-taxis that they're going to build out over the next few years. They're going to have incredible 50% margins, $163 billion in EBITDA, or earnings before interest, taxes, depreciation, and amortization. And like, take a step back. Like, let's just check yourself before you wreck yourself, man. Like 1.4 trillion ride-hail miles. Like, if you look at the United States, the annual vehicle miles traveled, I think this is per the Federal Highway Administration, in the United States last year it was around 3 trillion plus miles. So they're saying, now this isn't going to be apples to apples because Tesla's selling around the world, but it still implies the equivalent of nearly half of all miles in the US driven autonomously by 2025. So if you were to take all these autonomous robo-taxis and jam them all into the United States, they would be doing like half of all the driving that's going on in the United States in the future. So they're taking over the world. They're Tesla robots all over the world. Yes. And then look at Waymo. So Waymo actually has an app for fully autonomous in Arizona, Phoenix, Arizona. People love it. Like, the App Store is like 4.6 stars, a lot of 5-star reviews, very easy to use, love it, slick design and easy to use. Like, does this mean that Google should have like a several $1 trillion valuation added on to their $1 trillion valuation? Like, their current $1 trillion valuation, I'd argue, is primarily their ad business. Does this mean that like Google, like, because they own Waymo, should be like 100 trillion? Why don't we quadrillion? Google should be a quadrillion dollar company. Like, it's just ridiculous. Like, they're not going to be the only player out there being able to get the robo-taxi. So, anywho, just another key point to think about. So, like, let's break down these core inputs once again. So you have $4 trillion. This is the upside scenario. $4 trillion scenario. Their EV segment generates $37 billion in earnings before interest and taxes. Their insurance is $2.5 billion. Their ride hail is $163. So all in around, I'm combining EBITDA and EBIT, around $200 billion in profitability. Slap on some sort of teens multiple to that. Boom, $3 to $4 trillion valuation. And amazingly, you look at this and like 80% of their value comes from segments that are immaterial at this time. You know, the ride hail or the robo-taxi and insurance. I respect what Kathy, let me repeat this again. I respect the track record she's generated over the last few years. I respect the firm, how she's been able to gather tens of billions of dollars in assets. I really respect what Elon Musk has been able to accomplish. It's really incredible. But putting out projections like this, in my opinion, is borderline reckless. Like, there's a lot of pie in the sky here. You certainly get that with that range of potential, like, hey, up to $10 trillion valuation. That is just it's going to mislead people. It's going to get people like, yes, I will buy this at any price. And so it's just something to consider. It's something to be mindful of. When I look at my own personal valuation, and look, you can play around with this yourself. I put this in the description of the video. And so you can, it's up to you how you want to play around with it. Look, in 2019, they grew revenue 15%. 2020, they grew revenue 28%. Could the valuation go higher or lower? Maybe Cathie Wood is right. Maybe they get several $1 trillion and I'm all wrong here. Maybe the valuation just goes kooky dukes. But I look at this, I put what I view is a reasonable range of assumptions, 30 to 50% growth, 10 to 30% operating margins, 20 to 40% growth rate, 20 to 40 times multiple assumed for a few years out, and I'm looking at 100% upside and downside of like negative 80%. So I look at this, I don't find it compelling. I think this is not a good risk reward. I don't like the setup here. And personally, I think I can find potential multi-baggers that are way better risk reward, where it's like closer to 200% upside and like 20% downside. That's the type of setups that I look for. And so if you're interested in looking at the potential multi-baggers that I'm looking at, go to unrivaledinvesting.com, click on Journey. There's a lot more than that than just my portfolio, but I do update my portfolio. I post it at least once a month. I do have sort of updates, periodically for any material changes. I do have a Discord for folks that like to follow it. There's an educational series. You click on the description of this video, there's a full catalog of content with all my exclusive content, all the links there, and finding just one potential multi-bagger can change your life journey. So if you're interested in following my journey to try to find these potential multi-baggers, go to unrivaledinvesting.com. And if you enjoyed this video learning about ARK's investment's take on Tesla, please make a point of subscribing. If you're already a subscriber, I do appreciate that thumbs up. Thanks so much for watching.